KVB PRIME, developed for global traders, growing together with you.
Okay, everybody, welcome to KVB PRIME Weekly Analysis. Our topic for today is the darkest time since GFC, an area of exorbitant water over oil. Now, firstly, we're talking about the oil market and what's happening currently. And also, we will have a weekly market movement summary. And the last, we will have the weekly trading strategies and ideas for most important trading products that we will share with traders. Okay, now let's get back to our topic. As we all know, due to the effect of the coronavirus, economies around the globe experienced quite a shock. As the oil prices begin a price war, a new area where water is more expensive than oil had come. Take example from these pictures. Now we can see price comparison of liquid per barrel. A barrel of oil costs $24.25 per American dollar per barrel. The equivalent volume of the liquids, for example, water, it costs $53.89, and Coca-Cola costs you $117, and the milk in general costs you $158. So you can see the cheapest one is the oil. And the financial market in 2020 had enormous variations. On the 16th of March, after the failure of the reaching of the OPEC Texas agreement, Russia fired the first shot for the price war, offering huge discounts to its oil buyers. As the Saudi Arabia announced an increase in production from 9.7 billion per barrel per day to 12.3 million per day. Saudi also suggests OPEC members to maintain current production or even increase to gain larger market share. This was followed by Russia announcing that it has the ability to increase production from 500,000 barrels a day to a record high of 11.8 million barrels a day. What are the consequences of the price war? Well, the oil market and OPEC march towards. After the meeting of the 6th of March, oil prices plunged 26%, pushing oil prices to its darkest hours. Brent oil plunged 9%, recorded US $45 per barrel, while WTI plunged 10%, recording $41 per barrel. So both the prices were the lowest for the past 5 years. The initiative of the price war is at Russia. The purpose of Russia starting a price war was to increase production in order to gain larger market share and increases its power in Middle East area. However, due to the coronavirus resulting in a decrease in oil demand, Russia loses the opportunity. Russia plans to hold a protracted price war due to the following reasons. Both the US and the Saudi Arabia does not possess the capacity for long-term plunging in oil price. For US, the price war and the negative effect of the coronavirus threatened the already fragile economy. Thus, the decision power of where the price war is going actually holds on the Russians' hand. Now let's look at the similarities in the past events where oil prices had also plunged. Now from this picture, we can see during the first period we talked about here, in 2014 to 2016, oil price plunged by 76%. The main contributor was the production of the shale oil. Production productivity increased dramatically. At the same time, OPEC members disagreed to reduce production, attempt to push the shale oil out of the market. However, oil inventory increased while demand was held constant. Thus, oil prices plunged. In 2018, oil price plunged by 14%. The main contributor this time was the China-US trade war. Economic growth around the globe was decreasing, and the US placed the sanctions on Iran. Many oil producers increased production to fill the supply gap. This, in combination with the increasing shale oil production, resulting in a plunge in oil price. And now the last one is in 2020, coronavirus outbreak plus OPEC and Russia begin the price war. So historical events are always similar. We can see a couple of similarities from this above. So first one, oil price plunge was due to the disequilibrium in demand and supply relation. Oversupply result in a longer recovery time for oil price. Secondly, OPEC and Russia are two major suppliers. Once disagreements between the parties in productions occurs, it results in inventory stock up. Also, U.S. oil shale oil was highly productive, so how market demand was held constant. This will also, in combination, resulting in an inventory stock up, leading to a price crash. Okay, now let's move on to this next stage. We have a quick summary of the last week's market movement. Let's have a look at the biggest winner and the biggest loser. So the American dollar climbed the last week for up to 4.13%, Euro dollar for 3.65%, Pound for 5.2%, and Aussie for 6.3%. Both Brent and US crude oil decreased by over 20%. Dow Jones and the Standard and the Poor's index for 16.9% and 13.3% respectively. Okay, now then last one is more exciting part. It's going to talk about weekly trading strategies and ideas and see what we can share with traders. First, we were talking about US dollar. The US dollar had a strong performance last week. Weekly gain totaled at 4.13%. Market buyers are ambitious in opening more potentials. So US dollar opened a large potential after breaking through the upper resistance price at 100. And the highest point on January 2017 is here, 103.8. This is the only upper resistance in the market currently. The daily support at the other hand position at 99.1 and 100.4. Overall, US dollar after 2 years fluctuating uptrend, when hitting the up resistance at 100 and suddenly fall a V shape. So will this be foreshadow a large rebound? We will see. This will depend on if the US dollar can piercing through the position at 103.8 and will open up more rooms for upwards. Next one, we're talking about Euro dollar. In contrast, Euro had a poor performance, weekly losing total at 3.65% after experiencing a reversed V shape, and falling under a low point 1.0770, the market rebound at 1.0630. The low position 1.0630 become the new support position and very important. Once the market falls below 1.0630, the next short position is 1.0330. For 6 months, Euro dollar fluctuated at the average price of 1.10. This week's false signals that the Euro dollar is moving away from its fluctuation zone. Thus, traders can expect that Euro may appreciate to the same level. Euro may depreciate to the same level as the American dollar. So in the future, it could be 1-to-1 American dollar versus US dollar, and we will see. Next, we're talking about gold. The gold accelerated its downtrend lately, falling 15% from highest point 1702 to the lowest of 1450. Currently at 1450 is a strong support position. This is due to if the market falls below 1450, from a technical perspective, the market can fall to 1350. Hence, traders can monitor the market response between 1450 and 1575 between this area to determine your trading strategies. Now, last one, we're talking about the oil. So WTI weekly losing totaled to 30% last week. Prices are falling while percentage fluctuating are increasing, obviously. Intraday, we can see many 5% mark the movement in the future, probably. WTI at the closing had fallen below the lowest price of 30 in both 2008 and 2016 financial crisis, currently at a lower position at 20.6. Now, this position is an important intraday support, while the upper resistance 27.7, 32, 36.6, this resistance will help us determine the strength of the possible rebounds ahead. So any rebound below 32, we will hold a limited dynamics opinions. Okay, now this is all about this week's market commentary and the trading strategies and ideas to share with you. And we see you next time.